Hello, and welcome to Bonnie's Life, the channel where we navigate the exciting and sometimes bewildering world of finance and technology. Today, we're diving deep into a question that I get asked all the time. Bonnie, how do you spot the next big thing in crypto before everyone else does? It's the $1,000,000 question, isn't it? Or in the case of crypto, the million Satoshi question. The answer isn't about having a crystal ball or a time-traveling DeLorean. It's about understanding three key elements: narratives, cycles, and sentiment. And today, we're going to break them all down with a little help from some of the brightest minds in the business. So, grab your thinking caps and maybe a cup of coffee. You're going to want to be wide awake for this one. Let's get into it. First up, let's talk about narratives. In the crypto world, a narrative is a powerful story that captures the imagination of the market. It's the why behind a project's potential, the big idea that gets people excited. Think about the rise of DeFi or the explosion of NFTs. These were driven by compelling narratives about decentralizing finance and revolutionizing digital ownership. As the experts at CoinGecko put it, narratives in cryptocurrency refer to the trending ideas, stories, or beliefs that shape how people perceive and value cryptocurrencies. It's not just about the technology, it's about the story that's being told. And these stories can move markets in a big way. A great example is the Ethereum killer narrative. For years, we've seen new blockchain projects emerge, each claiming to be faster, cheaper, and more scalable than Ethereum. Some have had more success than others, but the narrative itself has driven billions of dollars in investment. It's a story that's easy to understand, and it taps into a real need in the market. So, how do you spot these narratives before they go mainstream? Well, it's about keeping your ear to the ground. You need to be active on platforms like Twitter and Reddit, where a lot of these conversations start. You need to be reading white papers, listening to developer calls, and paying attention to what the smart money is talking about. One of the leading voices in crypto trading, who goes by the handle CryptoCred on Twitter, often says that you need to listen to the whispers before they become shouts. That's a great way to think about it. By the time a narrative is on the front page of every crypto news site, you're already late to the party. Next, let's talk about cycles. The crypto market, like any financial market, moves in cycles. These are the natural ebbs and flows of supply and demand, of fear and greed. And if you can learn to read these cycles, you can position yourself to profit from them. As the team at Ledger, one of the leading hardware wallet providers, explains, there are 4 phases of a market life cycle: the accumulation phase, the markup phase, the distribution phase, and the markdown phase. Let's break that down. The accumulation phase is when the smart money starts buying quietly. Prices are low, and there's not a lot of hype. Then comes the markup phase, where prices start to rise, and more people jump on the bandwagon. This is where you see those explosive bull runs. After the markup phase, we have the distribution phase. This is where the early investors start to sell, taking their profits. The market is still euphoric, but the momentum is starting to slow. And finally, we have the markdown phase, or the bear market, where prices crash and a lot of people lose money. Now, here's the thing. These cycles are not always easy to spot in real time. As the saying goes, hindsight is 20/20. But there are tools and indicators that can help. For example, many traders use moving averages to identify the long-term trend. When the short-term moving average crosses above the long-term moving average, it can be a sign that a new bull market is beginning. Even regulators are starting to pay attention to these cycles. In a recent joint statement, the SEC and CFTC acknowledged the cyclical nature of the crypto market and the need for investors to be aware of the risks. This is a sign that the industry is maturing and that the days of the Wild West are slowly coming to an end. Finally, let's talk about sentiment. This is the overall mood of the market. Is it bullish or bearish? Fearful or greedy? Sentiment can be a powerful driver of price action, especially in a market as emotionally charged as crypto. As the experts at StockGeist.ai, a leading sentiment analysis firm, put it, sentiment is a key factor in predicting price movements. They provide real-time sentiment monitoring of hundreds of cryptocurrencies, helping traders get a sense of the market's mood. One of the most popular sentiment indicators is the Crypto Fear and Greed Index, which you can find on sites like CoinMarketCap. This index looks at a variety of factors, including volatility, market momentum, and social media trends, to give a single number that represents the overall sentiment of the market. When the index is in extreme fear, it can be a sign that the market is oversold and that a buying opportunity is near. When it's in extreme greed, it can be a sign that the market is overbought and that a correction is due. But it's not just about a single number. There are also tools that can analyze the sentiment of social media posts in real time. Sentiment, for example, offers a suite of tools that can help you track the sentiment of conversations about specific cryptocurrencies on platforms like Twitter and Reddit. This can give you a more granular view of the market and help you spot trends before they become mainstream. Of course, sentiment analysis is not a perfect science. As a recent paper from researchers at the University of Amsterdam pointed out, it is difficult to detect using current sentiment analysis techniques. But when used in combination with other tools and indicators, it can be a powerful way to get an edge in the market. So, there you have it. Narratives, cycles, and sentiment, the three pillars of catching crypto trends early. It's not about being a genius or having a secret formula. It's about doing your homework, paying attention to the right signals, and having the discipline to act on your convictions. Remember, the goal is not to catch every single trend. That's impossible. The goal is to develop a framework that can help you identify high probability opportunities and to manage your risk along the way. As the legendary investor Warren Buffett once said, the stock market is a device for transferring money from the impatient to the patient. And the same is true for the crypto market. So be patient, be curious, and most importantly, be a student of the market. The more you learn, the more you'll be able to see the patterns and the opportunities that others miss. That's all the time we have for today. I hope you found this episode helpful. If you did, please give it a thumbs up and subscribe to the channel for more content like this. And as always, I'd love to hear your thoughts in the comments below. What are some of the narratives that you're watching right now? What are your favorite tools for sentiment analysis? Let's continue the conversation. Thanks for watching, and I'll see you in the next episode of Bonnie's Life.